Hey guys, what's up? It's your boy Slim. So, today we're just going to talk about the TDI. So, as I explain, if you have questions, please do not hesitate to type or to raise your hand so that you can ask. So, I'm just going to look at a few synthetic indices. I'll look at what I trade, which is boom and crash, so that I can show you what I look at when I'm confirming my setups. I'm going to look at maybe step index V75. Then we're going to look at maybe one currency pair. That's if we still have time. But otherwise, the same concept we apply on all the assets or on any assets applies on everything else. So you should have TDI. If not, I'll show you like a video of how to actually use it. So I want to use it on a current trade, which is running at the moment. All right, so if you check here, we've got C5 on the 2-minute time frame. So the first thing you need to do when you open your TDI or when you install your TDI, it comes without this black line here. So if you look at your TDI, right, you've got your, I'm just assuming everybody already knows the TDI. You have your 68 level, which is your overbought, 32 level, which is your oversold. Then you've got the 50 level, which is fixed. So the first thing you need to do is you need to put, you need to highlight that 50 line, make it bold. So what I usually do is I do this, I put a black line, then I just adjust it to 50. Then I leave it like that. So looking at this particular chart, the first thing I want to explain is, okay, let's just go to M15. Let me explain there. Okay, so how this 50 works, I'm just going to start on the 50. Why I highlight this 50 level is because I want to check where my price line crosses the 50, right? Where my red line crosses the 50, where my yellow line crosses the 50. At this point in time, I know that I'm in a downtrend. So when I look at my chart, the only thing I'll be confirming on the TDI is sells only, sells, right? That's the only thing I'll be confirming. So you check if I see price pulling back up, I check my TDI, then I see, okay, what's going on TDI? After this reaction here, TDI gives me a shark fin, right? So after a shark fin, most of the times you usually get like a, so it's like one leg out of the bands, these Bollinger Bands or these volatility bands, then one leg inside. In essence, this is an M pattern. It's a rejection of the 50. So I'm looking to sell. So from here, this is a nice sell. I look to take profit here. So you see I'll have my sell entries in there. Stop loss will be right here. And my TP will be right here. As you can see, this one went straight to TP for those who took it. Then to explain today's setup, why we took a sell, mainly is because of this zone, which was left here. So as soon as my price got here, I knew that I'm looking to sell, right? But if you check TDI, TDI had not yet confirmed that sell. If you check right here, TDI was actually above, right? It was above the 50. But then, knowing my price action, I know price will react on this zone. So a confirmation would be your green line crossing the red. Then a confirmed sell is this particular setup. That's why you see right now, even right now, I have sell entries and I enter these sells after this rejection of this minor zone here. I'll show you that on the 2-minute time frame. So I'm still trading below the 50. Another shark fin. High probability that this price is going to fall to today's low, right? That's where my TP will be at. My stop loss, where is my stop loss? My stop loss will be just above this zone, right? That's how I use my TDI. So to use multiple time frame analysis, if you check on my synthetics on most things which I trade, I like to switch to the 2-minute time frame. So you could use the M5 if you're on your mobile phone, or if you're on MT4, depending on what you're trading. So on a 5-minute time frame, what you see is we have this level rejection which started here. Price was rejecting the 200 MA and the trend line, right? One leg out, one leg in. I start entering my sells here on this third leg, also on this crossover here. By the time I see this price coming below here, I know that I'm good for a sell. We did have a pullback here, but it wasn't that drastic. Was followed by a shark fin which rejected the 50, and the downtrend continued. So we caught this first trade and we exited. Now we are in this one. So we're looking for it to come as low as this is 71.94, 84.74. We can get 20 pips here as TP1. That's basically how I trade. So now I'm just going to highlight what you need to look for. So if you're using BTMM, that's the moving averages which you see on my chart. I've got the 13, the 50, the 200, and the 800. Exponential moving averages set to close. And I've got the TDI. So if I'm buying, those who like to buy crash, or let's say you're buying boom or whatever you're buying, you want to wait to see that momentum push up onto the upside, right, on your TDI, as you can see. So after this crossover here, if you check your TDI for confirmation, you'll see that it's trading above the 50. So you are looking to buy. Where do you buy? You look to buy when your price rejects the 13, rejects the 13, because you're trading above the 50, you're looking for buys. You look to take profits on your moving average or on your trend line. Now that you're getting like a divergent type of setup where your price is giving you higher highs and TDI is giving you lower highs, that's a divergent setup. You look to sell. And the confirmation only comes after the price line, the green price line of the TDI comes below the 50. So the initial move was here. Then we had the pullback, like I said earlier. Then the price eventually dropped. Same applies here. Price is rejecting the 50 level and also rejecting the 50 EMA. Hence, you see we are selling. So that's the 5-minute time frame. So it's more or less the same thing, same concept, different time frames or different assets, but the concept is just the same. So if you are scalping, let's say you're scalping your step index or anything else, let me actually open on step index. Let me open step. Then we quickly go to the 2-minute time frame. Or let's just go to the M15. Okay, M15 time frame. From yesterday, I think with that other lesson in the premium group, we marked a few zones where we were expecting our price to come to. So if we are to go to H1, you will see the zones we marked yesterday. Right. By the time we had the lesson, I think price was either here, if I'm not mistaken, and it pushed back down. Then it came up and it violated both these order blocks, violated even this one, but it reacted off this level here. Right. So you could have maybe put in order block here. But after this reaction, let's say you didn't catch the drop. If you see your price push back below your zones, you are looking to sell. Where is your confirmation? That's the confirmation. RR candlestick, so you start selling here. So from here, you can see price was in profit until yesterday's lows, which have just been broken now. So to put TDI as a confirmation, you're looking for shark fins. So price usually repeats what it does. If you are to look to the left where you see a shark fin on a TDI, it's only confirming what your price will be doing here. So once you get a shark fin, you know price is bound to fall, but most of the times you get a pushback up, right? So if you get a pushback up, and you look to your left, you look for order blocks, support and resistance zones. Okay, if you look to the left-hand side, last green candle before the push down, then you just draw that zone into the future as far as you can. So now, when price comes back here, you get this candle here. You look at TDI, shark fin. You can even scalp sell here or scalp sell from inside here if you're on a smaller time frame, because this is H1. What does price do after the shark fin? So it's one leg out the band, one leg in the band. You sell here. So that's an M forming in 2 days, price retesting the same zone. Same price action candles. The only difference is here they gave you 2 candles in between. Here there was 1, here there was 2. You sell here, sell here. We're trading below the 50. So we are selling, right? So you could have sold again here as long as your price comes back below the 50. So it's more of using a lot of confluences, especially if you're using indicators. If you're using naked charts, you can just play with these zones only and your trend lines only. It will still work the same. You could use a naked chart plus your TDI just to confirm. Still the same thing. You could use your BTMM like you see I'm doing here. So if my price is trading below the 50, it's a downtrend. As long as my price is below the 50, it's a downtrend. Same applies with the TDI. As long as price line is below the 50 level, it's a downtrend, like here, right? After this shark fin, this shark fin is the same with this one. So if you saw a shark fin happening the day before yesterday, then you see it happen again. Same price action. Explosive move up to take everybody who sold this nice setup here. If they were still holding, they're taken out. Shark fin, price drops. Same thing applies here. Shark fin, price drops. So it's more of looking at what you trade and back testing on the patterns which that asset shows. So if you are to scroll back, let's say you trade mainly step. Already you can see after every shark fin, straight drop, shark fin. Here we didn't get a straight drop, we had the pullback 2 times, but when it happened on the 3rd time, price was now going below the 50 level. So what can also help you, a confluence which helps you determine these, is just making sure you put your order blocks. So once you see this last green candle after this previous shark fin, just mark that area into the future. Don't be scared to mark your charts. So after you mark your area, you wait for price to pull back into that zone. So there's your sell, and this zone was never violated. Price then just fell, but then it was ranging. That's the only difference. There was no explosive move because price was ranging. It was a bit of a triangular wedge. As you can see, price was ranging like up, down, hit the top, bottom side, top, bottom side, top, bottom side, top, until it broke out aggressively, right? After this touch into the zone, then it broke out. So these are mainly the things you look for. So if you put your zone, shark fin, okay, I've got a zone. That means high probability this is set up. This area will hold. You sell, you sell, you sell. Stop loss, stop loss, stop loss. TP, you can put it on these lows in this zone here. Price eventually went to TP, right? So it's mainly a matter of drawing your zones and not being scared to actually execute the trade when you see it. So this is H1 step. All time frames TDI works the same thing. If you check from where it was dropping from this area, soon as it came below the 50, check your TDI, it's already confirming. You're trading below the 50, you're a seller, you're selling. You just switch to a smaller time frame. Then you start selling like no man's business. For every small pullback, you re-enter. Right? So this is step. Let's just check how our C5 is doing. It's pulling back. Let's see if we're going to get a reaction either on the 50 or on the 200s. But if price comes back into these areas, I'll be looking to cut my loss. So this zone is still valid. If they break now, I'll be looking to cut. But so far, I feel like they will still drop because we're trading below the 200 and the 50. On the main chart and on the TDI, we're still below the 50 as well. So this can easily just pull back down. So we'll get back to it before this lesson ends. So we looked at the crash, we looked at step. Let's look at V75. So if there's questions, do not hesitate to ask. This was marked yesterday again. We had this zone, which was broken, retested. So you'll be looking for entries here. TDI confirms it's trading below the 50. You do not hesitate to sell. Soon as you see this rejection, you check your TDI, right? Trading below the 50, below the 50. There was a bit of a pullback, so you put your trend line. We were waiting, obviously, for a break and a retest, which came, but then the dealer decided to push back into this zone. So now there's also a minor zone in there. Soon as we get into that zone, you check your TDI. What's up with the TDI? Is it trading below the 50, or is it showing you a pattern or any sign that is going to turn? So if you get the green price line crossing the red signal line, it's a confirmation of this. So you take the sell, you look to take profit on the low of the day. So after that, the price then came below the 50 as well, so you can scale in, right? It also came back down below this trend line. So that's all signs showing you that if you're in a sell, you're actually in a good trade. Basically, that's how you use the TDI. I'm not sure if there's any other questions which want me to like further explain the TDI. Maybe, let's see. On the TDI, you can also look for patterns, right? V75, I don't think there's any patterns here. There's a little M's, but I don't see any patterns on M15 here. So TDI also shows M's, W's, A's, which are shark fins, V's, which are bottom shark fins. It also shows your head and shoulders and your inverted head and shoulder. I'll try to show you on other assets. I think I saw a raised hand, if I'm not mistaken. Okay, there's no raised hand. Let me check. Oh yeah, there's a raised hand. Okay, Donald, you can ask. Feel free to ask, please. You can unmute yourself and ask.
Okay, good evening. Good evening. Okay, my question is about the spotting the minor zones. Well, maybe probably from when you've confirmed your TDI is maybe trading below the 50. Then on your main chart, you're seeing that these zones could be a probability of selling.
Oh, yes.
And maybe price, the dealer can decide to like take price higher. How will you then discover the minor zone, or how will you then attest that that zone is a major zone? That's what I want to know.
Okay, basically for you to do that now, you do your multi-time frame analysis. So when you're on a zone or an order block, the higher the time frame, the stronger the zone. The smaller the time frame, the weaker the zone, which means it can be a minor zone. So let me just give you an example. So this is V75. We're going to start with it on the daily chart. So from daily charts, you can see the last green candle. Let me just pinpoint it. Before the push down is this one. Right. So when you're marking these order blocks, it really depends. You can mark it from where the body of the candle starts until the wick on the top, if it's a green candle. If it's a red candle, you mark from where the body starts to where the wick ends on the bottom side, like that. If it's a green candle, you just use the top side. But then you might find out that if you mark it that way, maybe you might miss some zones. So others might prefer marking the whole candle from top to bottom. So if you mark this zone from a daily chart, you see that this zone is covering a lot of ground. Like it's covering this whole day, this whole day, this whole day before we had that move down, right? Then this candle is also covering this one before we had this push down. So what you do is you go to a smaller time frame. So this day is around the 16th of November. So let's go to H4. So when you drop down one time frame, you try to make the zone a bit thinner. Let me see if it's feasible. Okay, seems like my network is slow. Okay, patiently waiting. Let's try M15. Okay, this is M15, H4. Okay, so on H4, if you look at that same zone now, you discover that before we had this push down, price left this green candle here and this green candle here. So you can use those now as your zone. So instead of having this big zone, you can now minimize your zone into a small one. So it's either you started off with this candle here, or talking on recent price, you'll be using this candle now. But then you see it's coming from this one here initially. But if you don't want to make your charts like full of these rectangles or zones, you can just come to the recent one and do this. Right, so now that's your zone. This same zone can still be minimized if we go to M15. Now, when you get to M15, what you do is, let's see where it starts. It starts right here. So on M15 now, you only be using, okay, I cannot touch where the zone is ending. I would have minimized it, but you can see how we make it a bit thinner. So after it's thin, the only thing you do now is you wait for price. So any other zone being left inside at this point in time is minor. Once we have a bigger zone or a bigger time frame, this zone here, it's a minor zone, right? That's minor because now it's just a zone being left off on a smaller time frame, which means it can easily be broken if price wants to retest this zone. That's the only thing which these minor zones mean. They can easily be broken, but at the same time, they can still be valid. So if price pushes away, comes back, retested, then it dropped. That minor zone, price left another one here. It wasn't really touched, left another one here, which was then respected as price respected the 13. TDI is still trading below the 50 level. So you're still good for sales. So that same zone, as much as it is a minor, you can still extend it into the future. So minor zones can be broken like this, but it's very easy also for price to just come back below. Then if you check TDI also came back below, that means you could have, let's say you had taken, you do not take a sell, okay, let's say you had sell limits here. Sell limits, sell limits. Your stop loss always goes above the zone. If you had a sell limit there and your stop loss is hit, that's fine. If you wait, you will see that price after 45 minutes, at the close of the hour, you are back below the zone. That means you can re-enter, right? You can re-enter here, stop loss above that same zone. Then from here, you see price then fell. So you could have looked to take profits on this bottom one, depending with your like daily range or the momentum which you'll be seeing on the candles from the higher time frames. So you could take profits here. It's always easy to take profits at a smaller target. I like leaving this to run into profit, then letting it come back to hit your stop loss. It's always good to scale out or close your position if you reach any other order block which you will see on your left-hand side. So as price moves from a higher zone or a higher order block, those smaller time frames, they will leave minor blocks or minor order blocks. You can even go to as low as the 1 minute or your 2 minute time frame. The concept is the same. Let me just do this. I want to show you how price moves on the 2 minute, because it also leaves those OBs, but because it's a smaller time frame, they won't have much value. Like if you see this type of price action, it's hard to trade when you're seeing price action like this. So you need to wait. If you look to the left, this was a zone, minor zone, minor zone. So all these minor zones, you just have to draw them to see where price will actually respect or reject. So from this one, so you can draw it as this part only, or you can cover this whole area. So now if it's like this, you're waiting to see if price holds here and comes back down, or it's going to break and come up. So there's a whole lot of minor zones. So if it's confusing, it's easy. You just go to a higher time frame and see what your price will be telling you from there. So from a higher time frame, you can see price is rejected. It's an M pattern. There's a high chance these lows will be broken from my point of view right now. High chance, as much as this is looking like it might be a triple bottom, I feel like this price has got so much potential to push to the downside. Why I'm saying so is because I have this M of this zone rejecting off this zone here. And now this is H1, which means that zone is a bit powerful, right? So what I'm looking for now is a rejection of this zone on a smaller time frame, right? But don't rule out the fact that this is also an OB here. So price might even come back here for a third touch before deciding to come down and breaking the zone. So it's all probabilities. So you have to play around all time frames to check where you are getting a proper setup from. So what you need is a bias from your higher time frame. Then after that, you will know how to act. So from now, from this particular time frame, we see that we have a zone here on a smaller time frame. If it's broken, there will be a higher chance that we are coming here, right? So from here, if we get rejection, then we're definitely going to come back here, possibly break or stay in range. Those are all probabilities which you need to have in your mind before you even take the trade. So I'm not sure if there's any other question. While at least I check my phone. Okay, let's see. Already we're getting a rejection. Let's see if there's questions. All clear, all clear. Okay, another question. Okay. Okay, you can either type the question or you can just unmute and ask. Then we will finish. We'll
Okay,
run.
thank you for that explanation.
Okay.
Thank you for the explanation. Okay, but one more question is about the moving averages, because I've got the BTMM on my chart. That was on my PC. And yeah, I'm trying to do a lot of, I'm trying to do a kind of study on how to use it. Sometimes I see price moving within the 30 MA and the 50 MA. Sometimes I get confused. Is it when the 13 MA crosses the 50? Is it when it confirms itself, or when they both touches each other?
Okay, to explain that, I think we might have to explain the ID50 setup. So if you check on this particular area here, on this whole area. When your price is like this, intermingling with the moving averages, there is no setup. There is nothing. If it's like this, it's either you don't trade or you switch to a smaller time frame like the 5 minute, because this is H1. You might need to switch to a 5 minute to get a clearer view. So if it's like this, personally, I would prefer not to trade. Then wait for your price to break out, right? When it breaks out now, because this, if you check here, maybe you wanted to sell, but you check just after that, the price then came back up with another crossover. It's because your price is intermingling with the moving averages and it's just consolidating. So what you wait for now is momentum. So usually after you get a 1350 cross, price will push down, which cross is this cross. Most of the times, price will push back to retest the 50. So this is your ID 50 setup, intraday 50. ID 50 just stands for intraday 50. So it's when your price pushes away, then comes back to interact with the 50. So from here, that's where you look to take your sell from this area. But price can also push as high as this order block on top, right? It can still qualify as an ID 50. Then if you check on your TDI, there's a small shark fin, price rejecting the 50 level and the yellow baseline. That's a confirmation. So if you're on a smaller time frame, you can start taking it in here. If you're taking your entries on H1, safe entry is always after the candle closes below the 13, which is right here. But then if you're on a smaller time frame, obviously you catch it while it's still in this area. So the first thing you need to look for after the cross or after the 1350 crossover is a pullback. Same applies with after the 5200 crossover. It's a pullback. Then after that, you want to check the interaction of price with the 13, right? 13, before you get a reversal. So what will happen is you get your 1350 cross, which is the ID 50. Depending with the momentum of the price, it moves in waves. So these pullbacks usually happen on the 13 EMA. So when price pulls back to the 13, you're looking for it to either reverse before it touches, reverse on the touch, or reverse slightly above. For example, this is a reverse before the touch. So you can enter here. This is an RR candlestick, which is in confluence with an OB, which was somewhere there on a smaller time frame. So you can enter here, right? So from this particular ID50, you would have 1, 2, 3 setups in a period of 2 days. 3 setups to actually take trades on the step. Then after the pullback, and one other thing you need to know is if your price is trading below the 50, you should only look for sells. Wanting to catch a reversal usually leads to more losses even if you check. Like the amount of trades which we lose is when we try to catch a reversal. But if you just bear in mind that if your price is trading below the 50, look for sells, look for sells. It's easier that way than to look to catch a reversal here, because you might want to catch a reversal here, then price keeps pushing down. Or you might want to catch a reversal here to go up, then your price pushes down. So the best thing you can do is mainly trade with a trend. And the 50 usually shows you your trend on the time frame that you own. So for example, let's say you are on the 5-minute time frame and your price is trading below the 50. Then you know you're looking for sells. Right, let me quickly show you an example. Let me just slide a bit. Right, so if your price is trading, there's a 1350 cross. If it's trading below, you are looking for sells, and you're looking for candlestick formations or your candlestick types when they come back to the 13 or back to the 50. So if you get reversal candlesticks, it just means it's a continuation pattern. So price takes off, pulls back, takes off, pulls back, takes off, pulls back, then now it's arranging. As you can see, as long as you see a moving average in between the candles, there is no setup. But soon as your price comes back above the 50, clear uptrend, push up, pull back, push up, pull back, until a zone is violated or until a minor zone is violated. That's when you actually either take profit or exit your trade or cut a loss or cut a small loss. Then you wait for price to confirm direction, right? Once it shows you that it's trading below the 50, wait for the pullback. Do not sell here. Sell only after you see a pullback, right? After you see a pullback, this becomes a high probability sell. Do not sell here or sell here because most of the times the price pulls back. Only sell after you see a confirmed, when you see confirmed candlesticks showing you a reversal. So for example, on this one, right now it's still trending, as you can see, it's still consolidating, sorry, as you can see, but it's also sort of rejecting this zone. So now we would want to wait for price to leave this 13 EMA if it wants to come down, then retest, then we sell. Then push down a retest, then we sell. Right here, if you sell here, it's a high risk trade. You could sell here, this price will consolidate, or it could push up. Or you could buy here and this price will continue consolidating and push down. So as long as there's a moving average in between the candles, do not take the trade. Wait for a clear trend to play out. So I'll just quickly check our C5 before we finish. Looks like it might violate our setup, or they are taking out sellers, one of the two. Because this trend line is broken. I do have one more trend line on top there. So on setups like this, these are the things you need to look at now. So right now I'm on the 2-minute time frame, and I can see price is looking like it's really trading above the 50 now. So at this point in time, I'll start considering cutting my loss. But at the same time, I need to know that, okay, I have a zone here. So before I cut, let me see what the reaction here is. If price breaks, then I can cut loss and wait for the next best setup. So for now, I think that's all I wanted to explain. I'm not sure if you answered, if that was clear, but you should always make sure you incorporate your multi-time frame analysis. The higher the time frame, the stronger the confluences or the zones or whatever you'll be using. So if you check here, it could go like this. So I'm still looking at this zone as a high probability zone because my price is still trading below the 50 as well. So it could easily reject here. So the dealer could easily be taking out early sellers here. Early sellers here were taken out because I remember we exited here and the price pulled back. Entered again here, didn't really fall. Now it wants to take us out. So we're going to see how that plays out. But looking from the daily charts, as you can see, we had a bit of a reversal candle here, right? And it's in confluence with this zone. So you see, it's not all zones which I draw. Some of them are just, I know they are there. I just picture them in hindsight. So it's a zone being rejected from a higher time frame, as you can see, right? It's a higher time frame, which makes this area a high probability area to sell. That's why you see we are so adamant in selling on that area because it's a high probability zone, and that's the daily chart. If you switch to H1, sorry, to H4, there's been a slowdown in momentum. The only candle in momentum was this one. Price is slowed down here, so they might want to trap before they take the price back to the 50. If you check here, I drew this zone, so I'm looking to take profit in here first because this is a zone on H4, which means it's strong. Price might be held here, it might fail to break, so that's where I'll be looking to take profit. That's H4. H1, so you drop through all the time frames looking for your confluences. H1, we're pushing down. We broke the 50, retested, 1350 cross, and a retest. This is an ID. This is a perfect example of an ID50. So it should pay us. right after this peak on the top, 1350 cross retest, price should come here. A good fall would see price come to the 200. This would be a perfect fall, because even if you check TDI, it's showing us we've got momentum somehow, because the volatility bands are open. So at some point, we're going to get a huge candle at some point, or candles. And hopefully they will be to the downside because we are selling. So let's see what happens within the next couple of minutes or couple of hours. So that's H1, then M15. Still looks like price will fall. Last candle was a huge spike or a huge rejection of the 50. So let's see if we are going to have a red candle here. This is what we want. If we get this, then we can call it a night. But with this setup though, which one was, yeah, with this setup, I think we already reached our target, but we just want to maximize because we see our price will still want to fall. So let's see how it plays out. But if price comes above here, setup will be violated. Please cut loss and wait for the next best setup. So if there's no other questions, I think that's it for today. Let's just check M5 if we can get something there. Okay, M5 for me is looking nice. I usually like to get some patterns on M5, especially on boom and crash. There's usually some patterns which I see and I know that this pattern is going to be a killer. Like this type of price action on M5. It's usually followed by a couple of spikes. So let's see if we will get those spikes. Already TDI is showing us that a shark fin is forming. So we should drop. But we'll see what happens. Remember, price can go any direction. As much as we want it to drop, price can just start pushing up right now until the year ends. So let's just trade what we see. That's why you see I like to do multi-time frame analysis, check my candlesticks, how they are forming, especially on M15, M30, H1, so that I can have like a directional bias. But this price, it should drop to today's low, if I'm not mistaken. But I will update on the WhatsApp group. So thank you so much, guys, for your time. I hope today's lesson was fruitful. Let's catch up probably sometime tomorrow. Have yourselves a lovely night. I recorded this session, so I'll send it to you guys as soon as I finish downloading it. So thank you so much. Thank you, bro. Thank you guys for attending. Have a good night.